Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 17th of August. So as we start a new week, we've got again continued tensions with China across many locations around the world, particularly the US situation. Also the virus numbers are increasing in many locations around the world, particularly across Australia and New Zealand, which has entered into new lockdowns, and of course across Europe as well, and with sections of the UK too. So not looking particularly sort of helpful for the forthcoming winter in the Northern Hemisphere. On top of that, the markets are still waiting for some kind of direction based on the stimulus package that seems to be in a stalemate mode at the moment with the US. So let's take a look at a few markets here that we're keeping an eye on and some of the opportunities that we're looking at going into the first half of the week. So if we have a look at the Dow first of all, and just have a look at this on the weekly chart, we can see that the markets are just hovering underneath this sort of 28,000 level. It's been there for the whole week last week, and you'll see that on the slightly lower time frames. But to give some perspective, the Nasdaq and the S&Ps, they've sort of hit certainly the S&Ps hit their highs last week. The Nasdaq surpassed those highs a few weeks ago. So the Dow very much the lagger, and we've got 1,000+ points here for the Dow to catch up. Now, if we come down to the sort of daily time frame, you can see that the market is just sort of hovering here underneath that 28,000 level. It has been in the context of a long trend since back July here, so we've got that structure forming there quite nicely. And again, if we have a look at this, probably easier to have a look at this on the 8-hour chart, you can see how precisely this market's just sort of hit a brick wall. It's just sort of consolidating underneath 28,000. So it's going to need something sort of fairly big to move this, and certainly to break it to the long side and to carry on. I think it's waiting for that stimulus package and some sort of direction and conclusion on that. Now, the longer this goes on, the deeper the divergence that we're starting to see in here within buying momentum creeping in. So that's something to bear in mind. We might, and if we don't get some sort of conclusion on the stimulus package soon, or some sort of other good news to push the market through, then we might start to see some weakness coming into price action, and for this to retrace a little. So again, what we're looking for here when we're looking at trading opportunities is very much trading within these trading ranges. You can see that the structures are very closely aligned at the moment. And there's a cluster of them around this sort of 27,700 to 28,000. So that leads intraday opportunities being rather narrow at this moment in time. Still, that's the best way that we're looking at trading these at the moment, until we get some sort of breakout of this out of this range. If we come to the precious metals, these are starting to look quite nice now, starting to look a little bit more bullish after the retracements that they had last week. If we take a look at gold, for example, you can see that gold sold off back into the 1950 area. It's managed to sort of find support there last week, and also at the beginning of this week it's holding up here at 1950. So as long as the market holds above this area, then I think we could start to see potential moves up towards the highs again, make a run for those highs. If we can't get a hold underneath, a hold above that 1950, well then of course we're looking for more weakness. Back down to the previous lows here, this sort of spike low I think would be the sort of first area I'd look for, and then possibly back down into this sort of 1850 area on the daily time frame too. Now if we have a look at silver, because both of these tend to move in a similar direction, you can see that silver, very similar sort of structure here, but silver is holding up a little bit more bullish looking, I think. If we have a look at this on the 4-hour time frame, you can see that the 26 level here has been good support for the market. We had some very nice trades on this last week, and now the market sort of slipped back to find support and double test that 26,000. So again, we've got a good neckline here in the market. If 26 holds, then we're looking at bullish opportunities back up towards $29. If 26 gets taken out, then I think we could start to see 24 being retested on the cards in the short term. So a couple of opportunities there on particularly our favorite here on the silver market at the moment. Now if we come to the currency markets, a few of these are starting to look a little bit more interesting now, particularly as the as the dollar has started to move. Kiwi Dollar has been one that's been on our watch list and trading list for a while now. This market is rolling over quite nicely. If we have a look at this on the monthly chart, you can see the context of the macro picture here. The market's not managed to move above the previous lower high on the monthly and just sort of rolling over now. The Kiwi is the weakest currency across the board at the moment, so it doesn't take an awful lot for this market to continue its short and downward trajectory. So we can see weakness coming in here on the weekly chart, but again, if we have a look at this coming down to the daily time frame, we can see that we're already in a short trend here with lower highs and lower lows. We've also broken through, or just at this moment breaking through this level, which actually sort of opens up a trading window down towards that sort of 64.5 area, and below that there are some fairly decent sort of trading windows to the short side. You can see the sort of structure a little bit more clearly here when we come down to time frames such as the 4-hour time frame, where you can see that the level structure that the market is just on top of at the moment is quite a strong level. So getting underneath that confirms weakness, then we've got to move down to 65 and then down towards that sort of 64.5. So there's a few markets there that we're keeping a close eye on in the trading room going into the beginning of this week. I certainly hope it helps and look forward to speaking to you next time. Bye for now.